All right. In today's video, I want to go over the bullish case for Bitcoin. I'm going to be referencing two articles. One is called "The Next Bitcoin Bull Rally Will Be Totally Different from the 2017 one." And this other article, I really recommend you read this whole thing. Link is in the description. It's called "The Case for a Small Allocation to Bitcoin." And basically what we're going to do is we're going to talk about what Bitcoin is. We're going to talk about how far it's come. I want to talk about a prior digital gold implementation, E-gold, why it failed. I want to talk about cryptocurrencies today, why they don't hold anything up against Bitcoin, and basically the world that we are in today, and why Bitcoin has a strong possibility of succeeding. So that's what we're getting into today. Make sure you like the video, give this video a thumbs up, support the channel. And maybe this is a video you want to share with a friend. Basically, what we're going to do is we're going to list point by point, and where this video is leading is this paragraph all the way down here, or these series of paragraphs. Why not another cryptocurrency? Why is it Bitcoin? And basically, we're going to define the attributes that Bitcoin has and why it is. You know, when I say all in, that's a little bit of hyperbole, but the fact is I have a large portion of my net worth in Bitcoin and not in altcoin or not much of anything else, because in my opinion, there's plenty of risk for sure, but there's plenty of room for upside as well. So never go all in. But Bitcoin, after 10 years of working well, without interruption, no hacks, with more than 60 million holders, adding more than 1 million new holders per month, and moving more than 1 billion per day worldwide, Bitcoin has a good chance of succeeding. And if it is to succeed, the market it's trying to tackle, one Bitcoin may be worth 1 million in 7 to 10 years. That's a 250 times what it's worth today, back March 1st. But that's really what we're talking about here. And it's hard to believe, you know, when Bitcoin 10 years ago was worth less than $1, nobody thought it would get to $100, let alone $7,000, which is what it's at today. And so let's actually start right here. And throughout this whole thing, remember, we're going to put this in perspective, define what money is, what Bitcoin is, why it's different from everything, and why it's different from the altcoins. But let's start right here. And make sure you like the video, support the channel, and let's get into it. The first thing I want to point out is that Bitcoin, as a store of value and a means of value transfer, it's working great today, like it did 5 years ago, like it did 10 years ago. The fact is, you know, there's all these memes, oh, Bitcoin fixes this, Bitcoin fixes that. In my opinion, the fact is, Bitcoin, it doesn't need to do everything. But what it does do, it has to be steady and reliable. And Bitcoin as a store of value and a means of value transfer is working just as well today as it did throughout its whole existence. And we're going to get into more of what money is and past implementations in just a second. But before we move on, I also want you to notice that Bitcoin doesn't have a price history for its first 2 years. It was created in 2009, but for all of 2009 and for half of 2010, so about a year and a half, there was no market value. Bitcoin was collected and traded and mined. And the reason that I bring this up is to simply bring to light the fact that Bitcoin had a quote-unquote fair start. As in the first year and a half, there really was no expectation that people would ever get rich, even when it had a slight market value. Nobody knew that this is what a cryptocurrency would do, which separates itself from a lot of altcoins, because there's always that expectation, you know, that this coin is going to pump in price. I mean, every cryptocurrency after Bitcoin started with a market value. And the second thing I want to quickly point out is that it is hard for the human mind to think about, in this case, a price point in the future. Think about it. When Amazon crashed in 1999, nobody thought it would be at the price point it's at today. And so for us today, you know, we can imagine Bitcoin getting back to 14,000. We can imagine Bitcoin getting to 20,000. But it's hard for us to imagine a $100,000 Bitcoin or a $200,000 Bitcoin, just like it's hard to imagine, you know, Amazon looking like this if you were in 1999. Anyway, the second point, and we're going to quickly fly through these because what I really want to talk about is, you know, what separates Bitcoin. This series of paragraphs is really powerful, in my opinion. Let's talk about money. If you take a look at what gives gold value and what gives fiat value, you will see that Bitcoin matches, or in most cases surpasses, gold and fiat in every single category. Portability, fungibility, verifiability. The only thing that Bitcoin doesn't have at this point is an established history, which, it's part of the risk. And we've been around 11 years and we have the Lindy effect going. We'll just see if we can get the established history. But Bitcoin also does something that is very different, or is something that's different, because Bitcoin is decentralized. And that's really one of its main value propositions, because if you don't know, there were digital e-golds, digital golds value transfers in the past. I'm thinking of e-gold, that were quite successful, but they're no longer popular, and I'll tell you why. They're no longer around. So e-gold was launched online in 1996, and it had grown to 5 million accounts by 2009. At its peak, in 2006, e-gold was processing more than 2 billion worth of spends per year. It was very successful. Digital gold transferred online. It was shut down by the US government because it was very centralized. There was a time when the government could knock on certain people's doors and shut Bitcoin down. That time has long gone. It is very possible for the government to do this with altcoins still. And it's just because they don't have the same Lindy effect that Bitcoin has. So for instance, I've been to Justin Sun's office at Tron. If they wanted to shut Tron down, all they have to do is go to the address listed in San Francisco, knock on his door, and say, we're shutting this down. Just like they did with e-gold. They can do this with Cardano at this point. They can do this with pretty much every other altcoin. Is there one that is as decentralized as Bitcoin? Let me know in the comments. I don't believe that is the case. And we see that today with Mark Zuckerberg. Facebook is creating its own cryptocurrency. And what did the US Congress do? They said, hey, come on in here. We got a series of questions. Look at him trying to drink water. Got a series of questions we need to ask you. And that's exactly what they would do with any of these altcoins if they ever got big, because they have a CEO. Notice they couldn't do that with Bitcoin. Another point with Bitcoin, how it differentiates itself, is that because it's been around 11 years, gaining network effect, and more miners turning on, trying to mine Bitcoin, its hash rate is all-time highs this year, and you can see it's been trending up forever. It's exponentially growing. People turning on mining rigs, trying to mine this digital gold. And what this means is it would cost hundreds of thousands, millions of dollars, I'm not sure the exact number, a lot of money, in order to buy mining equipment and try and create a 51% attack on Bitcoin. And if they were to do this, it would really just be a huge waste of money for them. They would lose a lot of money killing Bitcoin if they could even fund it. So I just wanted to point out that the hash rate at all-time highs, meaning it's very expensive to stop Bitcoin. Now let's pivot to world events and the halving coming up. Before we get to how we're going to end this video. And if you're finding value in this video, please let me know in the comments, or if you have something to add, please let me know in the comments. So with quantitative easing back in the United States, $53 billion were printed just the day of this article. Seems like China, countries all over the world are at a race who can devalue their currency first. People are going to look for a hedge against this. And Bitcoin and gold is an answer to this. Besides that, sanctions all over the world, or what's going on with Hong Kong with these bank runs. There's roadblocks, there's bank runs, there's sanctions. Bitcoin is a peaceful way to opt out of this system and actually give you peace of mind storing and transferring wealth without fear of government, stepping in. Plus, with Trump probably getting reelected, we have this endless trade war going on with China. We have tensions between the US and Iran. The fact is, the macro events going on in this world, people are going to look for a permissionless store of value and means of value transfer they can use to stop sanctions and just opt out of this quantitative easing going on. Now, besides that, Bitcoin's supply flow is being cut in half in 165 days. This is set in stone. This is what's it's different from many other assets in this regard. If Bitcoin's supply flow is cut in half, yet the demand stays the same, well, then the price can only, increase. And what happens if the demand increases and the supply is cut in half? Then the price would increase more. I think that's a real possibility. I want to end with what I feel is one of the most powerful series of paragraphs in this whole entire really well-written article. This is the case why you are doing yourself a disservice if you don't have at least a small allocation into Bitcoin. And they lay out the argument here. Why not another cryptocurrency instead of Bitcoin? There are over 1,000 cryptocurrencies that have at least one transaction a day. So why Bitcoin and why not any of those other ones? Over 60 million people own Bitcoin, and over 1 million people become new Bitcoin owners every month. The other 1,000 cryptocurrencies have less than 5 million owners combined. So Bitcoin will add more users in the next 5 months than those 1,000 cryptocurrencies added in their combined history. Bitcoin is moving over $1 billion a day, which is more than any other cryptocurrencies combined. This is just the beginning. The most important metric of all, though, is how much can we trust these platforms, or how sovereign are they? The measure of how sovereign these platforms are is the square of the computing power they have. If we use electric consumption as a proxy of the computing power each of these platforms have for security, all of these 1,000 cryptocurrencies combined have less than 1% of the Bitcoin blockchain processing mining power, so none of them yet are really sovereign, and in many cases their code is controlled by a person or a small group of people. That's the God's honest truth. And your argument may be, well, the Bitcoin's been around 11 years. Some of these other cryptos have been around in a lot shorter time frame. If these other altcoins ever gain properties to make me think, wow, this might be a investment as good as Bitcoin or better, I'm going to be the first to let you know. But keep this in mind. The Bitcoin blockchain is an open protocol, not a company. The history of protocols is very different than the history of companies. In the history of companies, there's a lot of change, disruption, churn. Think Microsoft to Apple, eBay to Amazon, AltaVista to Google, MySpace to Facebook, etc. However, the history of protocols is very different. Once a protocol gets established, it almost never changes. For example, check this out. We're using the internet today, IP, Internet Protocol, or we just colloquially call it, we just call it the internet. And we use this for all of transport data. And there were other things that were used in the 90s, but that's no longer the case. Today, our only route is IP. We are using only one web protocol and only one email protocol. The email protocol, for example, is quite lousy. At the protocol level, there's no way for me to know if you received my email, much less if you read it. There's no way for you to verify my identity when you receive my email. There's no way to handle spam and many, many other things that could be fixed at the protocol level. I'm sure some people have already developed much better email protocols, but we've never heard of them, and most likely we never will, because once a protocol gets established, it becomes the only protocol for that use case. And it's not possible to displace it with a better protocol. The point is this. Many people say, well, I want to find the next Bitcoin because Bitcoin's probably the MySpace or the AltaVista. If you look at it from the sense of Bitcoin isn't a company but the protocol, and you look into the history of what happened with email and the internet, you'll see that the first one, the one that has the biggest network effect, is the one that usually succeeds. I mean, you can even think of your own keyboard. You probably have on your keyboard Q, W, E, R, the QWERTY keyboard. It's not the best way to organize keys. It's actually, they used that for the different keys. So, back in typewriters wouldn't break. And there are more efficient ways to organize the keys, but because of the network effect and everybody learned the QWERTY keyboard way, we just happen to use it. And it's an example of the first one, the one with the biggest network effect, is the one that will ultimately succeed. Anyway, guys, that is it for me today. I basically, a lot of people were asking, why am I so bullish on the future of Bitcoin? That's the reason, and not altcoins. That's the reason, and why is a large portion of my portfolio or my net worth in Bitcoin, and that's the reason. So I'm happy if you disagree with me. I'm just a normal guy with a YouTube channel on the internet, normal guy living in California. I'm just trying to figure out which cryptocurrencies will succeed, like all of you. And right now, I'm betting on Bitcoin. And if that ever changes, I will let you know. But I hope this provided value today. Let me know in the comments, and I will see you tomorrow, my friends. It's going to be a great year.